Hi, little guy here, the unknown, and today I just want you to listen to something, okay? Because there are some people who say these things don't work, and these are new things. They've been there for decades, and there are many well-known people who actually follow these kind of strategies. And right now, as you can see, this is hedge fund market wizards. Okay, they were actually interviewing Larry Benedict. Okay, he's one of the most successful hedge funds managers. Okay, so just listen to what he has to say. I will add something.
He comes into the conference room to discuss a position with Benedict. Benedict gives him some instructions and then continues our conversation. Sorry about that. I traded so badly today. What did you do wrong today? I trade a lot of mean reversion. One of the things I do is 3 days up, 3 days down. If the market is up 3 days in a row, I want to start getting short. And if it's down 3 days in a row, I want to start getting long. The euro sold off during the past few days and I started going long. The position will probably be okay, but it was down a number that was as much as I was willing to lose, so I covered most of it.
So as I always say, the number 3 is very effective. Why? Because it's a psychological number. Okay, it's a psychological number. They know that by day 3, most of the indicators and most of the stubborn people, of which most traders are considered stubborn people. Okay, it is believed that most people will believe something on the third attempt. So by day 3, if the market is going in one direction, say for instance if it's going up, then most people will start buying and buying and buying. Why? Because now they start believing in the trend. Okay, and even indicators, most indicators will most likely start detecting the trend on the third day. Okay, so that's why the number 3 is used, and it's used most of the time. We have proved over and over and over and over again, countless times on the charts, how they maintain the number 3. It's not always number 3, but most of the time it's day 1, day 2, day 3. Okay, let's continue.
Do you know where you will get out before you get in? It's based on the P&L. If I'm down more than 2% month to date on any day, I will clear out everything. I wasn't near that point today, but the daily P&L was down more than I wanted to lose, so I liquidated. How much was that? 10 million. In percentage terms. A little less than 1%. I know that doesn't sound like much compared to most hedge funds, but I am a grinder. But what did you actually do wrong today? The stuff that I do just didn't work today.
Okay, as you heard, okay, the stuff that he does just didn't work. So it's not always gonna be the case. Okay, there are days when the day 1, day 2, day 3 will obviously not work. Okay, so don't say just because it didn't work for you today and you start assuming that it doesn't work. No, it does work. Okay, it does work. So listen here.
But that's not doing something wrong. There's a big difference between losing on your trades and doing something wrong.
You see, there is a huge difference between doing something wrong and losing on your trades. This is actually a good loss. Okay, so this is something we always talk about, and that's why I wanted to share this with you. Okay, because I am actually listening to this audiobook. Okay, because as I said, I love market wizards. I get to learn from most of these successful people out there, because this is where they share most of their strategies, their experiences and everything. Okay, so we did talk about good wins and good losses. Okay, so in this case, yes, he took something and he lost, but it's a good loss. Okay, and I'm not saying wait for day 1, day 2, day 3 and then sell on day 3. No, you have to wait for the setup, and most of the time we wait for the first red day or the first green day, because our goal is not actually to catch the high or the low. We want to go in direction with the trend. Okay, so as you heard, Sometimes yes, it will not work. Okay, sometimes it will not work, but it's day 1, day 2, day 3. I'm just happy because most people actually think that this doesn't work. Guys, this is a strategy that has been used by many successful people throughout many decades. Okay, many decades, and there are actually many people who are actually teaching this strategy. Unfortunately, most of them are actually charging a lot of money to teach this strategy. Why? Because it is something that has been working for a long time, and most people didn't have access to this knowledge. Okay, it's fortunate that right now the internet is growing and most of the things are coming out to the light. Okay, there are many people who have been profiting from this kind of strategy from decades. Okay, it's nothing new. Most people think it's something new, it doesn't work, it's something that people are coming up with. Okay, this is something, as you can hear, uh, that even a successful hedge fund manager is actually using. So guys, this is amazing. Just master it. Okay, just master it. Okay, it's highly important. Okay, and I strongly recommend this book, Market Wizards. That's where you'll get to learn from most of the successful traders out there, because that's where they share most of the things. Okay, and honestly, you will learn a lot. Okay, it's either you can buy their books. I'm not affiliated anyway. Okay, I just found value in this kind of collections or books. Okay, and as you can see, I'm using Scribd. It costs $10 per month, roughly $9 per month actually, and you can listen to any book or you can read any book you want. So guys, I really recommend Market Wizards. And yes, I've listened to many, and I've also read a couple of Market Wizards book. And yeah, guys, there's a lot of knowledge. uh, there's a lot of there